Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, July 10th, 5:32 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. Check the trend gauge over here. We are showing bullish slash uptrend for all three of the time frames that we track the major indexes, as well as market leadership. Two things to be concerned about. The Dow can't get back above the 21-day moving average, but that doesn't take us off of bullish for that time frame. And we finally got rid of the stop sign because the NASDAQ 100 is now less than 6% extended from its 50-day moving average. Why is it suddenly not extended? Well, we've been expecting a pullback, a reversion to the mean for this, but the NASDAQ which the Nasdaq rules for the Nasdaq 100 are going to help us out with the rotation to or the reversion to the mean, because they announced over the weekend that the index had become too top heavy, and they are going to do a special rebalance on basically reducing the percentage of, it'll really be the top 7 stocks. You're very familiar with the 7, obviously. 6 of them were down today because of this rotation. And the good thing is that it's forcing rotation into other NASDAQ 100 stocks, because those will by default become a bigger percentage of the index. Uh, all of the Some of the parts has to equal up to 100%, and if you're reducing the big 7, that means you got to increase the ones below that. And we saw that pretty consistently today with although 6 of the 7 were down, the NASDAQ 100, which was weak all day, finished uh, basically flat, up 0.03%, and that's because of the rotation out of the big 7, or 6 of the big 7 in this case, and into the remaining components of it. We see this as a healthy rotation. Small and mid caps got money flows. They continue to have a nice bounce. And all in all, this is good for the market. You can't look at green closes across the board and think it's bad. Obviously, if you're very heavily weighted in the top 7, you took a hit today, but you're just giving back gains from their outperformance year to date. So here are the final numbers. And we very much like seeing the action of the RG8 today. This is our 8 growth ETF composite, up 2.03% on the day. S&P finished near the highs of the day, up 0.24%. NASDAQ 100 just barely positive. Dow up 0.62. Mid caps and small caps was where the money was to be made today. Mid caps up 1.25%. Russell 2000 small caps up 1.64%. Global diversified 60/40 stock and bond up 0.19%. In-house GROTECTION up approximately 0.67%. We'll take a look at the portfolio, the GROTECTION portfolio components. We made one trade today. We'll also take a look at the big 7 and some other charts of interest. But here's the S&P 500. Broke below. Let's take a look at a 5-minute chart so we can see here. So overnight we were mostly negative, still open negative, but well off the overnight lows. Down about 0.1%. NASDAQ 100 opened even, basically flat on the other indexes too. But you can see we just started working our way higher, and then 3 waves of selling hit. This is more evident on the NASDAQ 100 because while we opened basically flat here, there was a harsh move down and then a rebound, and this was completely dominated by the selling in these top 7 names. Based a little bit. This was the second wave down, didn't undercut. It did on the S&P 500, but it didn't undercut here. And then another wave of selling hit, undercut the prior low early in the morning on the NASDAQ 100. But then you can see some nice rotation and a comeback. Not quite near the highs of the day, but a pretty good finish nonetheless. Back to the S&P 500, you can see this really didn't get hit hard at the beginning, the way the NASDAQ 100 did. There's three waves down here until we reached a bottom that coincided with that second sell-off in the NASDAQ 100, but then also a rebound near the highs of the day. Pretty tight range on the day. All in all, a healthy day for the index. We're 3.6% above the 50-day moving average, less than a percent above the 21-day moving average as we continue to be between 3 and 4 weeks into this, basically this base that we're building after this most recent leg up. This is very typical of an index. You take a couple of steps forward, you consolidate. Now, normally consolidations, without a change in character, consolidations resolve in the direction of the primary trend. In this case, the primary trend is up. Of course, if we break the lows of a couple of weeks ago, that would require us breaking down below the 21-day moving average and the bottom of this base. That should be about the time that the 50-day moving average would be coming up to meet that. So we may continue to see some of this over the next couple of weeks, and that would be just fine with us. On the downside, we're running into a seasonally weak period. The NASDAQ typically peaks the end of this week for the summer. Here's the NASDAQ 100. You can see that that's a pretty good close at the bottom of the day, shaking off these harsh bounces that we saw intraday, and this was all selling within those NASDAQ 100 stocks. They recovered somewhat by the close. But really, I think we're going to continue to see some of this because they are so heavily weighted at the top. Uh, the rules are somewhat complex. They're on the NASDAQ website, but basically the sum of the top five can't exceed 38.5% of the overall index. So they're going to shuffle the reweighting of them. And then the next couple can't exceed 4.5%, something like that. So it's basically going to, they're going to think of it as pouring. Uh, uh, let's think of it as you've got a cup with ice in it and you're pouring it into another cup and you're trying not to let all the ice get out. So those, you're going to let some of the ice out into the other cup, and that's going to be the reduced amount of ice, but it's still going to represent the NASDAQ 100 stocks. And otherwise, and then the other ones are going to increase in value. So that's our primary take on it. That's our representative of the action that we saw today. And until evidence to the contrary comes up, that's the thesis that we're going with, which also matches the action. Here's the Dow, some relative strength today, bouncing at the 50-day moving average, basically right on this flat 21-day moving average. Let's look at the mid caps. Breaking out, good high, new high closes. This is good stuff. It's good for breadth. It's good for the overall market. This is where the mid caps are where the next big cap leaders come from as they develop their products and build their sales and earnings. And you can see relative strength, not quite in line with the relative strength highs that we had over here, but this was a good digestion. The handle in the cup and handle pulled back to the 21 late last week and now breaking out today. IWM small caps, this was the leader on the day, hasn't quite broken out of the handle yet, but since this Thursday, nice equivalent of upside reversal that we came in off of this low 180 level all the way up to near 188 right now, back two closes back above the 21-day moving average. So those are the five major indexes. Let's go to the dollar. Dollar weak today, breaking back below the 50-day moving average, moving toward the bottom of the range that it's been forming. Weak dollar, what did that mean for precious metals? Silver, barely up on the day, near the top of this recent tight 2 to 3 week action as it tries to hold the 200-day moving average. Finally seeing a little bit of relative strength over the last week. Gold stocks or gold ETF GLD tight range today, just barely positive. GDX had a good day though, up 2%, undercutting, reclaiming that 200-day moving average. Note the jagged relative strength, trying to get back above. We're looking for this to get a change in character and get it back above this 21-day moving average of the relative strength line. That would probably coincide with a move back above the 21 EMA on the price chart itself, and that would be a change in character as we've continually failed there over the last 5 to 6 weeks. The VIX was higher today. Did fail into the declining 50-day moving average. That's good for the bulls. So for now, it continues to be stuck. Three closes now below the 21 and the 50-day moving average as it tightens up. This is coiling for a break one way or the other, very similar to the way the indexes are coiling for a break one way or the other. Let's flip to, well, we'll do Bitcoin really quickly and then we'll flip to bonds. Bitcoin up 2.3% today. Bitcoin stocks did very well also. Bouncing off the 21-day moving average here. That's a healthy consolidation after pulling back after a nice big 3-day move up a few weeks back. Let's flip to bonds now. Bond prices up across the board. That means rates coming down. That's good for the overall market. Here's BND. Uh, you can see this gap low that it made 3 days ago made a higher high today, running into declining moving averages. So we got to see what will happen there, as a 72-ish level had been acting as support. It broke it with the gap down. See if it acts as resistance as we move back up into it. This very easily could be a bear flag that is showing here on this 3-day pattern. Go to TLT, lower lows here. Uh, Relative to 2 days ago anyway, which means that the curve, the yield curve, is getting less inverted, which with the strength, the economic strength that we've seen recently, that would indicate the possibility that maybe there won't be a recession. We don't know for sure. We'll go by the price and volume action on the charts as we normally do. But let's check out rates first. The 10-year, we had that big breakout above the 40 level 3 days ago, and we're just consolidating that now. This could easily be putting in a handle before rates go higher, or it could be that this holds as resistance and we start pulling back. That's the TNX. Here's the 30-year TYX. Kind of a similar setup. This 40 level had been resistance. Now three higher closes on the rate. Um, Interesting that we're making higher highs here, not on the 10-year, but we are on the 30-year. That's consistent on what we saw in TLT and BND2. But again, we're at this area that has been an area of resistance. Will we pull back and that 4 level will act as support before going higher? A lot of that depends on some of the economic data that comes out this week. We've got CPI on Wednesday, PPI on Thursday, the weekly jobless claims as well. Those will all undoubtedly impact the market. Something that shouldn't be a surprise with the bad action in the Big Seven is that the RSP, equal weighted S&P, outperformed in a major way versus the um, market cap weighted S&P 500. Same thing for QQEW, equal weight, big relative strength, bouncing off that 21-day moving average, up 1.8%. And this is pretty much tells you very clearly how money rotated out of the top seven and into the bottom 93, I guess we can call it, on the NASDAQ 100. Let's take a look at these stocks really quickly. The top seven. Here's Apple down 1.09%. We've got alerts set below the lows of all of the big seven today. So, because really the question is now, is there further downside to go, further rotation to go with these, or was this a knee-jerk reaction to the downside? Maybe by funds that were anxious to get out ahead of the stampede, because there are ETFs and funds weighted to in addition to the Nasdaq 100 that are, pay attention to those weights, and anybody holding those stocks that's top heavy in them, you're going to be taking a beating. So there could be some forced selling. We'll see what happens. They're supposed to by Friday announce what the new index weights are going to be, and those weights will take effect on the 24th, which is the Monday after, not this Friday, but the following Friday. So here's Apple. That's first. That still looks fine. Microsoft broke the 21-day moving average, held the 50-day moving averages. You can see we've got the bracket alert set there. So money very obviously flowed out of there to above average volume also. Google. Now this is either in third place if you add the two tickers together, or it's in fifth, sixth, or seventh place on the weighting. because they've got two different tickers. They've got Goog L and then Goog, but regardless, both of them look are the by far the worst looking chart of the big seven. You can see this ended up being a bear flag, and we gapped below the 50-day moving average today, closed at the low of the range. That's GOOGL. The difference between the two tickers is voting rights. There's a Class A share. Um, the voting rights are different. That's to maintain control of the by the executives or the big shareholders. Look how bad the relative strength has been on Google. As you know, they're facing antitrust issues worldwide, pretty much. So what's next? Tesla. This would be number 5, I believe. Undercut but closed right on the ADMA. Volume below average on this, down 1.76%. Nvidia. This is number 4 rank, undercut but closed right above the ADMA, lowest volume on a percentage basis relative to the 50-day moving average of the 7. And then the one that was up today, Meta, undercut, bounced, very strong. 50% above average volume here, though. So people wanted to buy Meta, don't care about it. But really, this may actually see money flows into it if it's number 7 and it's below that 4.5% threshold. So that may be the explanation for Meta acting well today. So those are the core 7. Let's go to the tail of the tape now. Uh, VIX up, stochastics mixed, RG8 all looking good. The stochastics all had a positive turn up on the RG8. NASI RSI, we'll see when that updates at 6 o'clock what that looks like. Basically flat on the dollar and looking at these 8-month highs on interest rates. Day count from 3 days down to 1 day up, 25-day rally since the breakout. Did we break back above the ADMA on the S&P 500 by the close? I did not update that. Where are we? We're basically right on, just a tick above the 8 EMA. So close enough that we would actually call this a 0 or a close right on it. But the 30th day above the 21-day moving average. Very strong. S&P and NASDAQ 100 stay in that 3+ week base. NASDAQ now 5.7%, as I mentioned, above the 50-day moving average, no longer highlighted in red, but still something to be wary of. As far as what outperformed today, banks, oils, home builders had a really nice bounce. Look at ITB. We own NAIL, NAIL. ITB followed up on this bounce at the 50-day, or sorry, the 21-day moving average up 2.79%. We've got a 2% in NAIL that was up 8.31%. The home builder play definitely not going away, but definitely have an inflection point too to trade against, which is the lows of last week. Industrials and healthcare strong, retail strong, transports and gold stock strong on the downside. 6 of the big 7, bond yields and the dollar. The only trade we made was selling chat. And the reason we sold it is because of the big heavy weights of those Nasdaq stocks. We didn't want to sit around and see it get demolished. We basically made about 1% on the trade, so slight reduction in our adjusted beta from 2.18 to 2.12. Here's a couple standout charts that we'll want to look at. But the bottom line for the day is small and mid caps outperformed as NASDAQ 100 rebalancing forces healthy rotation out of the big 7. We see it as a positive. We see it as the NASDAQ 100 probably moving more sideways, let the moving averages catch up to it. This, of course, doesn't mean that the market can't sell off. It certainly can, but if it does, we would expect to see more than those big 7 selling off. We'll start seeing today's lows break on the rest of the stocks in the NASDAQ 100 if there's going to be a true sell-off. That's the alternative way for us to revert to the mean, in this case, the 21 and the 50-day moving average. So what acted well? We'll show chat, which we sold. Really nothing wrong with it. But like I said, with the heavy weights, the big heavy weights that it has, felt like the best defensive way to take action. We already showed NVIDIA and Tesla. See the rest of the portfolio now. Celsius Good day today, up 2.4%. Uber down, but closed near the highs of the day. Tight range, still hanging around the 8 above the 21 day MA. DT, negative reversal today. Lower volume, but a very nice day today, up 3.2%. So back to the top of the range that was set on Friday for that stock. Nice recovery. SMCI, a good day here also. All-time highs, high close on SMCI, up almost 4% on the day. Caterpillar also had a good day as money flowed into industrials coming into the top of this handle. And Live Nation LYV. Final holding closed near the lows of the day. Still continuing to act very nicely, trending higher along this ADMA. So let's take a look at 5 stocks that stood out today. DraftKings finally breaking out after, I made a comment about this in Friday's video, how it's just consistent how on strength this thing sells off, and even on strength I had no intention of buying it. Well, I didn't buy it, and it made a fool out of me, up 8%, 8.3% today with a big breakout on nice volume. If you bought it, good for you. An earnings gapper and big move up on nice volume. Helen of Troy, this is cosmetics and retail breaking out of this flat base on nice volume. So this is one that goes on our watch list now. Fortinet has continued its nice recovery off the 21 with a big breakout today, up 4.3%. Palantir was started the day great, had a negative reversal, bounced at the 21, ended up a very nice 6.3% gain on the day. And ITB and XHB, all those builder stocks strong. Restoration Hardware breaking out above, not above this cup, but this is one of the best looking cups you'll see, but it continues to come to the top of it. We really need to see a handle here, but the market doesn't care what we want to see. And that's going to wrap it. So, as always, love to hear from you. At a minimum, if you're watching this on YouTube, we'd appreciate a like on the video and sharing it with anybody that you think might benefit from it, and your feedback to me, Don at RevereAsset.com. If you're interested in becoming a client or have a uh, general finance question, my partner Dan Stewart, Dan at RevereAsset.com, or the phone is 855 Real Wealth. It's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. We did the protection part of GROTECTION last year. We're doing the growth part now with the healthy market. As always, stops in place because, as I said, it's not how much you make, it's how much of that you can keep. And with that, I'll wrap up today's video for Monday, July 10th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.